Good evening, all. This is Shea Horowitz, ShogunTrading.com. This is a free weekly newsletter. I wasn't able to do the newsletter last week because I've been sick for the last week. I lost my voice and it's been a real mess. So that's why I skipped a week. Anyway, I'm back. Market is coming out of the wedge shape consolidation that I've been talking about. This is S&P 500. Let me show you the same chart on the 60-minute chart, and you can see what happened over here. Up, down, up, down, up, down, and we're finally penetrating above it. Now, the bad news is, or what was really frustrating, is the fact that we've been trading smaller and smaller waves as the market was consolidating, which made for very, very tough trading over the past month or so. And the reason why is because the moves are getting smaller and smaller, and by the time you accumulate a position, the market is turning around and turning around and turning around and turning around to the point where it's so choppy that it's very hard to carry a trend when the market is consolidating. Now, this is something I talked to you about, in the last newsletter, and you can check it out. You'll see that that's something that always happens, is that the market goes through certain stages. Let me show you the same thing on a daily chart. You can see consolidation, 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 tighter and tighter, nice move. Tighter, nice move. Tighter, 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 nice move. And then tighter, tighter, and tighter. Now, people's tendency is always to trade the more difficult periods and sit out when the market is actually flowing, because they're afraid that they have missed the entry. They're afraid that no, there's no way it's going to last. They're afraid of missed opportunity, and they end up sitting out when the market is really, really moving. And they end up trying to trade really, really hard when the market is consolidating. Maybe because it's easier to trade when the market is consolidating. It's easier to get good fills. It's easy. You feel safer when the market is not moving to enter into the market. The problem is that it's also much, much easier to get stopped out. You're almost guaranteed a stop loss when the market is swinging back and forth. If you look at these days, you can see up days, down days, up days, up days. And it's almost 2 days up, 3 days down, 2 days up, 3 days down, 3 days up, 2 days down. There's not really a trend that you can hold for any longer than that. And that's a serious problem. So, what I'm seeing in people is the fact that they try really hard to trade that. And the other tendency that people have is when the market's not really moving, they think that they're going to make more money by doubling their size, by increasing their size, because the moves are smaller. Therefore, if there's not that much profit available, I'm just going to increase my size. If I usually trade 500 shares, I'm going to trade 1,000 shares. When I trade 1,000 shares, for the smaller move. The problem is when conditions are not good for trading, when they're not conducive to trading, doubling your size is not the correct thing to do ever. The best way to trade consolidations is to sit out. Frankly, to sit out. And I want you guys to trade, and I want you guys to make money every day, and I want to tell you that every trade is going to make so much money every day. But when the market is doing this, you can't. Here's candlesticks. Candlesticks, you can see big red, small green, big red, big green, big green, big red, big red, big red, big green, small green, big red, big green. There's no trend over here, and it's very, very, very difficult. So the patient trader waits for the long-term trades, which are these. Now, there's one more point I want to talk about, and that's if you have a smaller account. If you have a smaller account, you're under day trading restrictions. If you're under day trading restrictions, you cannot afford to trade consolidations. And the reason why, because you'll be wasting your money. If you get stopped out or something like that, it's going to count against your day trading limit. And when it counts against it, you'll have to sit out. Your best bet, if you have a smaller account, is to save your ammunition. Save your ammunition and wait for the long-term trade that happens after a consolidation. This is a trade we called, by the way. And now, the same thing is happening. We are coming out of consolidation right now. NDX, NASDAQ 100, is already flying, is already coming up. This is something that you want to participate in. Waiting for a pullback. Once we get the pullback, I'm going to go long on the NDX. Let's see Dow Jones Industrial Average. Basically the same thing. You can see all the higher bottoms, higher bottoms, higher bottoms, penetrating resistance, and that's what you want to see. Now, from an analysis standpoint, what you still have to look at is the fact that the 200-day moving average, which is the red line, is still coming down. The blue line, 50-day, we're just now crossing. The 21-day, the yellow, is actually turning back up. We're still against the long-term downtrend, but we're starting to turn around. We're starting to come up, and that's very, very important. S&P 500. 200-day moving average, the red line, is still coming down. The blue line, 50 days, still coming down. We're about to cross it. The 21 is already turning. There's quite a bit of distance between them. So what I think the S&P 500 is going to do is I think it's going to come up to about the 1350. It's going to hang around here. It's going to come back down, make a higher bottom again, and then it's going to come back up, passing the 200-day moving average and doing pretty well. If you look at the reverse of the chart, you can see it over here. You can see how crossed, came back, consolidated, and then had a very nice downtrend. Basically, if you flip this chart over, I think that's what's going to happen right now on the S&P 500. So be prepared. The last couple weeks of August are coming up. Kids are going back to school. People are coming back to work. People are coming back from vacations. Europeans are coming back from vacations. There's a ton of money sitting on the sidelines. And I think they're getting ready to go to work, and they're getting ready to come into the stock market. If we look at oil, if you remember back, check back, and you'll see that I called a top on oil. Not any magic, but we called a top on oil right around this area, and it's been coming down quite a bit. We're actually down 25% off the top. That's quite a bit, and I think that's going to help. Here's my voice going away again. That's going to help the market quite a bit. I think the crash in the commodities market is doing pretty well. So when oil coming down, what do? We trade the airlines, and that's something that we've been doing very well on. Is the airline index. We bought that airline index as it came out of consolidation a few days ago, and we're doing pretty well with it. 22.58 was our entry, went all the way up to 25.40, and that's something you could have seen across the board. That's UAL, United Airlines, Americans, NWA. You can see all of them basically took off from the sweat-shaped consolidation, did pretty well, especially when oil is diving. Lots and lots of news out there. Lots of decisions that are being made right now. And we're going into election season. So there's quite a bit that's going to sway the market around. There's quite a bit also to drive the market straight up if needs be. And that's something that you need to look at. This is the Home Builder Index. Basically just like the airlines. Also depends on oil. If real estate market is going to turn around, this is the stocks. These are the stocks to own, and you can see that it is also penetrating to the upside. Something to look at. The other index that I want to show you are the financials, and you can see that it also made a bottom right over here. Basically, when Fed stepped in and said, anything goes. Excuse me. And wedge up consolidation. It looks like it's time to buy the financials. If you're looking at Washington Mutual or if you're looking at Wachovia, I don't suggest buying an individual bank. I suggest buying the whole index. The XLF I think is excellent. That's what you want to be at. Anyway, big couple weeks coming up when we're going to finish up the summer. I think that the market is going to be setting up for the long-term uptrend. This is the time to come into the market. This is the time to get ready to trade, to position yourself, to catch up on everything, and to get ready to take advantage of a nice long-term trade. That's about it. Have a great week, and I'll talk to you next week. Take care.